Yes.
10 years, yeah. I really feel that we are seeing
It's very
ourselves
nice
virtually.
to touch base with you. Yes,
It's very good. Very good to see you. Very good to see you.
Thank you so much making me a part of this. Thank you.
So, good morning, everyone. I'm Parmesh Shah. I'm the global lead for rural livelihoods jobs at Agriculture Global Practice, and also starting a new program on digital agriculture now. And it's my great, I think we are so excited to be hosting this event today. And we have a very distinguished, panel, both the presenters and the discussants. And I think we have a bumper kind of registration on this webinar. I think we are seeing now that this might break all the records. The last one we had on the National Rural Livelihood Mission had 779 people joining. And I have a bet with Amit that if this crosses it, I'm going to give him a treat. So we are all waiting for the numbers at the end of it to see what's the number today. And I think this is a topic which is very exciting for everyone and very topical here. But before I start, I'll give you some do's and don'ts because these webinars have a particular, protocol which we need to follow. And I just please keep your microphones muted to avoid any background noise because people are calling from cell phones and others. So keep your mobile phones, notification sounds, and other applications muted, because it creates a lot of distortion in the other people are not able to hear you. Also, most important is that this is not a formal Q&A where you will be able to raise your hand and then ask questions, because we can't have more than 500, 600 people asking questions. So please be using the chat box very proactively, and you can start asking questions even while the presentations are going on. And what we will do is we will harvest these questions, cluster them into questions, put to the panelists at the end of it. That way we save time. And the questions, please keep on asking the questions while the presentations are going on. Do not wait for the presentations to be over, but you can keep on asking it till we have the last presentation. And we will harvest all the questions. And just to let you know that all the people who have registered will receive a copy of the presentation and link to the recording. So please don't worry about that, because you will have the record of both the presentation as well as the link to that. And with that, I will ask Rolf to kick us off. Rolf is the manager of our EFI and the IFC, and he leads our work in this area in the South Asia region. Over to you, Rolf.
Ramesh, thank you very much. So I am extremely excited and actually extremely honored also to be able to kick it off. I'm sure I don't need to tell everybody what Agtech is, but just to make clear, it is really technology to help smallholders gain efficiency gains, productivity gains, access to finance, access to markets. And by that makes it clear it can be a great number of things. For one, I'm told this will be the beginning of this series. Today we'll tech-enabled financing in agriculture. There will be other issues, hopefully also on financing and firms, and also how to use technology, but also more importantly, what kind of regulations are needed. And for that, I would just like to share the experience in FinTech. So FinTech, or using technology for finance, is probably only 1 to 2 years ahead of Agtech. And we're certain that Agtech will soon provide huge opportunities as well. But in FinTech, the challenge is you have a information asymmetry between the banks who have the money and the technology and the consumers who actually don't really know the rules and actually perhaps not as good as money as the banks are. So, which is why you need regulations to ensure that those companies entering in this space actually do not abuse the information asymmetry and actually help the consumers use it. And so this goes to show that there's, in Agtech, I assume there will be something similar, that on one hand, you want to use the technologies to help the small farmers. You want to link to the larger companies so they actually have better produce when they need it. But you also need to help the small farmers to make sure that they actually get a good deal and not a bad deal. This issue of regulation is something that IFC at some point would also like to present. But as we're having a series of different, this is on the beginning of a series, I'm sure that's we'll eventually get around also to this topic. And I'm greatly looking forward actually to listening and learning from Rabo Bank. Thank you.
Thank you very much, Rolf, to set the context. And I think we in the bank, just to let you that this is a joint endeavor between the agriculture global practice, the agri-finance community of practice, the IFC, and our other global practices. So this is a very multidisciplinary kind of activity. And what I would just like to tell you is that we are working across the globe on this theme. And this is a growing area in Africa where we are building now on Kenya on the huge fintech work there, go to Agri-Tech, and we are working very closely with IFC, Rabo, even there also. And so I think the today's thing is we want to showcase a very good, a seminal report which has been produced through Rabo Bank and which Hemendra and Anil have co-authored, and they're going to make a presentation on that. And that gives us a little bit more depth into the issues which we are grappling with. And so I would also later on as discussants, I would like to introduce Dr. Leakey as Abhilash Leakey, who's the additional secretary, and he's part of a lot of transformational initiatives and reforms which Ministry of Agriculture is doing that. And so he will give us the perspective of the government, as well as what he thinks about how this sector would grow and what could be the role of the government there. We have Gayatri, who is our lead specialist and who also leads our initiatives on National Rural Livelihood Mission and lots of other transformational initiatives in our portfolio, the Agriculture GP. And we have Panos, who is the global lead for agriculture finance and all the things which we are talking about. So I think we will get a good discussion going on after that. So I would again request you that please mute your mics and also encourage you to switch off your camera if you are not speaking, because that brings a lot of distortions in that, because I think it becomes easier for us to interact. And even I will switch off my camera once I'm not speaking, so that's easier for it. The only people who are the participants and the panelists should keep their cameras on. And these events are very, very important, but we need to follow the technical and the protocol which we have to follow in order to make them useful. So I would now go to the presenters now, and I think first it's Albert Bugard, who's the head of the innovation of Rabo Foundation. And Rabo is really bringing in a lot of innovations in both the fintech and the agtech and generally the agribusiness sector. So over to you, Albert, to kick us off from the panelists.
Yes, can you hear me, Parmesh?
Yes, loud and clear. Please go ahead.
Very good. Okay, hello everybody. It's a pleasure to be speaking here. My name is Albert Bogart, Head of Innovation in Rabo Foundation, part of Rabo Bank. We all know the problem. Huh? We know that farmers have low productivity. We know that whatever is produced, 20, 30, 40% gets lost. And from the access to finance perspective, we know that just 10 to 20% of the financial needs are met at maximum. And we also know that the more traditional solutions that also we've been working on for many years are just not scalable enough to address all the needs. The magnitude of population growth of natural resources declining is just too large. So that's why 3 years ago we started to look at AgFinTech. We've built up quite a lot of experience in that period. And at that time, things became possible that were not possible, let's say, 5 years earlier, based on things like rural internet access, low-cost tablets, mobile phones, mobile payment systems, satellite IoT devices that were not available previously. So that's why we believe that in the combination of AgFinTech, there was a huge potential to reduce basically the costs of lending. From the financial perspective, there are basically two costs. It's the risk costs. If you can reduce that, you can reduce your interest rate, but it's also the transaction costs. Interest rates can be low, risk can be low, but the farm is very difficult to reach. And information asymmetry and lack of information, of course, plays a role in that. And that's, of course, where data comes in. And our favorite Agtech companies and AgFinTech combinations that we look at are solutions that are functional in itself already in the physical world. So they either provide a cooling solution or they provide valuable advice to farmers, but at the same time they produce data. So we look at data-driven AgFinTech, and why? That's because the incremental costs of data are then relatively small. Because even if you have to collect all the data just for the sake of collecting data, it's problematic because smallholders are small. That's how it is. And it's with that new alternative data sources that we see that traditional credit analysis, traditional data points used in credit analysis can be replaced or complemented with those new data sources, and that's extremely helpful. So we have built up quite some experience with all kinds of fintech data, like wallets, like mobile payments, doing a lot of analytics on that, credit scoring type of technologies. But that's still a bit in line with, let's say, the old school world of looking at credit. And what is absolutely new is agricultural transactional data that you find in supply chain systems. If you can have information on what is produced at what time, that's really new and it's highly predictive. You still need field data, you still need farmer field data, but with the tools available now, there's a lot, it can be done a lot more efficiently. And finally, there's a lot of external data that in itself is not so useful, but combined with the other data sources, becomes extremely useful. Since I just have 5 minutes and was asked to share some lessons of the last years, I limit myself to 3, but we could write a book or have many more webinars on it. What we learned about data, let's take that as the first lesson. Data looks very nice, but there are always 3 dimensions. And the first one is technical. Is it really correct? Talk about remote sensing, for instance. The second one is, let's call it analytical predictiveness, how useful it is. How much does it add to credit scoring systems, for instance? And then when it's correct and when it's useful, is it affordable? So that's the cost efficiency. And those 3 make up for a quite complex environment, actually, because it has to be technically sound, analytical, predictive, and cost efficient. And then you find that combination of the 3 is really use case dependent. So you save 10% for a maize farmer that uses 150 euro farm inputs, you save 15 euros or $15. For a palm oil farmer that uses $1,000 for farm input, you save 10%, it's 100. So completely different use case, and that's just an example. So the consequence of that is that you do need a lot of use cases, and you have to really understand what works when and under which circumstances. And that's also one of the reasons why we are so actively involved in webinars like this, but also in other ways of cooperating. It is important that we do share knowledge, we do share experiences. It's because of that, it's because of that complexity. And then, only then you can realize. Second one, very quickly, is we all know that smallholder farmers need multiple solutions for multiple problems. And of course, that translates to also AgFinTech solutions. Only single point solutions are almost never enough. Only in just very well optimized environments, but they're a minority, I would say. But that's also true for AgFinTech platforms, or AgFinTech companies. I haven't seen many that are able and capable to do everything, provide all solutions. That is almost impossible. And if I'm an investor, I would be an investor looking at AgFinTech, I would really look at how realistic are people. Do they really understand what they are good at, and do they understand what they are not good at? Because then they understand what else they need and whom to partner with. And that's also basically a call for partnerships. Not just creating one ecosystem, but an ecosystem of ecosystems that may all be partial solutions in itself. So again, a lot of room for cooperation and ecosystem play. The third one is, and that's a very obvious one, but if you develop new AgTech products, but you implement them in old school, let's say 1.0 organizations, they are basically doomed to fail. We've seen so many interesting new technology trying to be adopted by, let's call it old school organizations, very traditional banks, for instance, and it doesn't work. It doesn't fit with the credit policies or with anything else. That's why new business models are interesting, but new business models combined with new technology are necessary. And it's also a way to reduce transaction costs further. Because if 5 different types of organizations, from input suppliers to banks, if they all work with the same farm, it is inexpensive. It is expensive. It is inefficient. So that's why combining different roles and responsibilities is extremely important as well into new business models. And before I hand over to my colleague Arindam and the moderator, just my global perspective on India is extremely promising. You have a population density that makes piloting, let's say, very, very worthwhile compared to other more remote regions. You have an incredible talent pool. All the people that worked in Silicon Valley and coming back to India, and all the talent in India. And you have a beautiful digital infrastructure, the Aadhaar stack, the identities. That's something many other countries, even in Europe, can only dream of. So extremely promising. We see a big role for Indian companies also beyond India. And I really hope you will enjoy the presentation and the research we have done. So thank you very much, and over to the moderator.
Thank you very much, Albert, for setting the context. I think we brought a lot of issues about how data is very critical and how we can get the transactional data and combine with financial data, but it's very difficult to create a data ecosystem which enables that. It becomes more complex. It can't be done in difficult organization. Change is required. You need a lot of change in the organizational cultures to use data and these solutions. And I think we are looking forward to the presentation there. I would again remind all the people to keep mooting. You have been very disciplined till date, and please continue to be so. I would also request the presenters to look at the chat box, because you will get reminders about time, not by interrupting you, but from the chat box there. So please look at chat box, where Vivek will send you a time reminder so that we keep in time. And so I think keep that in mind. So I will now hand over to Arindam Datta, who is the Executive Director for Rabo Bank, Rural and Development Banking Advisory in Rabo Bank India, and one of the sponsors of this report. Go ahead, Arindam. Floor is yours.
Thanks, Parmesh. Thanks to the World Bank for organizing this seminar. Now, India has been an enigma for all the people who have been interested in the farm financing sector and the smallholder financing sector. While we have the second largest number of smallholder farmers, we also have a huge network of banks and probably the maximum number of branches more than anywhere else in the world. But the problem remains chronic, that smallholder farmers do not have access to quality finance. Now, most of the policy that we have seen in India, whether it's through the central bank, that's RBI, or through the government of India, has been on the supply side. How they've been nudging, cajoling the commercial banks in India to fund the farm sector, especially the smallholder farmers. However, so far the conversation has not revolved around the quality of demand and consolidation of demand. How do the smallholder farmers and their organizations make themselves heard meaningfully to the financial institution? It's that part of the piece I think we have not dealt with so well in the last few decades. Now, as Albert mentioned, we have a new generation of companies who bring in the best of human resource talent. They bring in private investment, and they bring in the best-in-class technologies. Now, these companies were not existing 3 to 5 years back. And what is the hypothesis that we have now? The hypothesis we have is that these companies, because they are working closely with the farmers, they have the capability to create a digital footprint for the farmer, for the farmland by geotagging and geofencing the land, and also for the farmer produce. And possibly that would make it more meaningful for the supply side of finance. And as Albert mentioned, the supply side, the banks, the financial institutions are grappling with two big issues which prevents them from unlocking capital to smallholder farmers. It's the transaction cost and it's the risk cost. So here the hypothesis is that with the kind of farmers and the information that the tech companies can throw up in a meaningful manner, the origination cost would go down drastically for the banks. And second is because of the monitoring now possible of the crop, the production, the productivity, the expected loss, banks would be able to, in a very cost efficient way, monitor their portfolio very, very closely. So that's the hypothesis we have now. In India, we have seen some traction already. Some of the new age generation financial players like Samunati, which exclusively finances the agriculture sector, are already digitizing their clients, which are mostly farmer producer organizations and the underlying farmers. We have Avanti, a new age tech platform registered as a non-bank finance company based out of Bangalore, which is a cashless, presenceless, paperless platform. It's been promoted by Ratan Tata and Nandan Nilekani, so that's what we expect, that they are using a digital delivery mechanism for financial services to the rural areas, and they are also digitizing their clients. The other piece is the post-harvest financing, something that we have missed out on in most of the conversation, because that's extremely important for smallholder farmers and their organizations. Now we have players like Argos in Bihar and Arya Collateral across 7-8 states who are providing extremely key, not only collateral management services, but also digitizing the farmers' produce to ensure a better realization for the produce. Arya Dhan, which is the financial arm, they are soon going to roll out a digital platform where at the press of a button, all the information regarding the farmers would be available to the banks, and Arya Dhan would be able to provide financing within seconds. So that's the possibility of AgFinTech. On the platform side, we have lots of companies which are exclusively focusing on AgFinTech, but there are a lot of companies who are providing 360-degree services to the farmers in terms of inputs, advisory, market linkages, etc. And also, because of the rich information they have and the digitization they are doing, the banks and financial institutions have started cooperating with these financial institutions. But still, it's baby steps in the Indian market. Now, as the world's largest food and agribusiness bank, Rabo Bank and its foundation, that's Rabo Bank Foundation, is interested to sharpen its focus in the Indian markets to find out what are the key services and products it can roll out in the Indian market to enable smallholder financing and unlock more capital from the mainstream banks. With that in mind, last year we commissioned a study to understand both how do the banks look at it, what's their ability to consume technology, and on the other side, who are the digital players, how credible are they, how advanced are they ready to work on pilot projects or on specific kind of financing schemes with the financial institutions. So we engaged ThinkAg, which is a leading umbrella platform for all the Agtech fintech companies in AgFinTech companies in India, and this was led by Hemendra Mathur, who's a mentor for all the Agtech companies in India, along with Microsave, a leading advisory firm in the access to finance field. And from their side, it was Anil who led the study. He has more than 25 years of agriculture, rural, and digital finance, and we asked them to do this study to find out as to where India is, with two purposes. First is, how do we as Rabo Bank Group provide our services? And second is to share it with all the ecosystem players, especially the financial institutions, so that they could work on specific projects with the tech companies, the AgFinTech companies. As Albert mentioned, it's a collaborative effort. One segment of the ecosystem cannot do it. I will stop for the time being, and after the formal presentation, I'll come back to answer the steps and the specific initiatives we have taken in the Indian market. Thank you.
Arindam, I think you set the context quite well about what Rabo is doing, the whole Agtech scene, the new type of companies and new type of organizations which are really trying to change the ecosystem for egg financing. And it's very good that you also introduced Hemendra and Anil. And Hemendra is a founder of ThinkAg and partner of Bharat Innovation Fund. I think he's a known thought leader in this area. I think he's also, very busy in the venture capital world on this. And Anil is partner of MSC Payments and Distribution. It's good to see the studies being led by people who are thought leaders as opposed to the consultants and others. So I'm very glad to introduce Hemendra and Anil talking about this. Over to you, Hemendra.
Yeah. So thanks. I will begin. This is Anil. Can you hear me? Yeah. So first of all, I would like to thank Albert and Arindam for setting up the context. And hello everyone on this webinar and good evening from India. Before I begin, let me first thank Rabo Bank for giving us this opportunity to work on this report. I would also like to thank World Bank team who set it up. As already said, that I and Hemant will cover the report and to talk about how we can enable formal financing in agriculture. Holders, farmers, or small and marginal farmers, this is how we know India using technology. So I'm just moving to the slide 2. Can you move to the next slide, please? Sorry, previous slide. Thank you. So, see, while we designed the study in the consultation with Rabo Foundation, we set out 3 specific objectives. First, the landscape of farmer financing on one hand and landscape of Agtech on the other hand. And second was to understand and come out with new engagement models possible in the market. And third associated objective was to understand how both types of players, that is and Agtech on the other side, and how can they come together and work in tandem instead of working in silos, which is the case. So for this purpose, we spoke to a lot of stakeholders, considering those objectives in mind. In our study framework, we kept farmers at the entire agri value chain from pre-production to production to post-production. In addition to looking at the secondary source of data and information, we also looked at both financial institutions and Agtech in terms of how they are interacting with the farmers. To round it up, we also spoke to other stakeholders, for example, industry bodies, incubators and accelerators, and so many others. So based on that, we have divided the presentation into 4 parts. First part is focus on current scenario and gaps in financing the farmers. The second part covers the Agtech landscape with specific focus on financing opportunity. We will cover how do we see the intersection of Agtechs and incumbents. And in the last part, we will recommendation on how to work with this ecosystem for the benefit of small and marginal farmers. Hemant, can we move? Next slide, please. Next, Hemant, again. Next, please. So I think it's important for the audience to understand some basic numbers in India, particularly with regard to agriculture, before we talk about the farmers and financing. Strong value proposition that agriculture and light sector brings to the overall economy. Sector provides livelihood to nearly half of the population and has made India self-sufficient in terms of food gain. In terms of value, it adds around $368 billion to national economy and nearly 10% exported. this sector has shown a great resilience during the pandemic. Despite so many problems that are facing due to COVID-19 situation, government is able to provide ration to a large number of people thanks to the buffer stock and massive production. And all of us are able to buy almost everything that we wanted in terms of food grain without much difficulty. So moving to the next slide, that is slide 5. Next slide, please. Let us take a closer look at the profile of farmers and how they are accessing finance, critical input for them. Overall, in India, we estimate about 146 million farmers. Not surprisingly, most of them, or around 86% of them, are small and marginal farmers. Small and marginal farmers are categorized as small landholders with less than 2 hectares of land or 5 acres of land. And this is, as we know, this is one of the most vulnerable segments. With another nearly 19 million medium farmers, we have about 0.9 million farmers who have more than 10 hectares of land. Let us now look at how do they raise financial resources. Is that only 30% of the farmers are able to borrow from formal sources. If you look at smallholders, half of them are not able to borrow from any of the sources. The remaining half, nearly 50% of them are at the mercy of informal lenders. This is a really grim situation for farmers financing in India. This situation may be progressively better for medium and large size, but for smallholders, this is a real problem. Can we move to next slide? Let's also understand how banks have provided agriculture credit in India. About the priority sector-based lending. So on overall basis, they funded nearly $168 billion in 2019, and they set out a target of about 180 billion for financial year 1920. It seems from the numbers that most of them met the target set out under priority sector lending or PSL. As expected, focus was on large loans, and hence nearly 50% of credit was offered to medium and large farmers. Thanks to revised guidelines on PSL certificates, even the private and foreign banks are able to achieve their PSL target, as they bought those certificates worth billions of dollars from other banks instead of lending to small farmers directly. Can you move to next slide, please? This brings us to the fundamental question on why banks are so reluctant or hesitant to offer credit to small and marginal farmers. So based on our research and discussions, we found there are 3 main reasons. They are on account of difficult access, limited and reliable information, and unpredictable policy development. First, banks feel there is a high cost to serve this segment and risks are disproportionate for that. Many of the small and marginal farmers live in difficult remote areas, hence it causes access issues. To reach this segment, there would be a high cost as compared to large farmer or borrower with higher ticket size. Access also create high risk of default as banks are not able to monitor their loans as frequently as they would like to do. Second, banks also face challenges in terms of collecting the information from this segment. They feel that either it is too costly to get this information or it is difficult for them to verify. Banks also find it difficult to access financial information of farmers due to very nature of their transaction. This is typically mostly in cash, leaving the limited verifiable digital trail. It also reflects on banks' inability to interpret content data, a typical hallmark of digital lenders that you see in the market. It's nothing more that we want to say in the policy environment, which is third major challenge. Bankers feel that cycle loan waiver affects the credit culture of the farmers. Put some data, over $63 of farm loan has been waived in last 10 years in India. I'm not trying to say that is good thing or bad thing, but this is something what bankers do. Now let me pass it on to Hemant to cover the Agtech landscape and what we are learning over there in financing farmers. Over to you, Hemant.
Before Hemant starts, I just would like to announce that can you disable your videos? because people are having poor audio quality because of too many people have put their video on. So I would request anyone who is not speaking should disable their videos and go to the audio so that everyone gets a better reception. Over to you, Hemendra.
Thanks, Anil, and thanks very much to the World Bank team and the Rabo team for giving us opportunity to present to a very wider audience. So let me start by saying that I'm in the Agtech sector for more than a decade, and it's been a very exciting journey for me. But what is most exciting for me, I would say, is the kind of development that I've seen in last few years with the entry of high quality entrepreneurs coming back from Silicon Valley or quitting their sort of high paying tech jobs, trying to make a mark in agriculture. I think that caused sort of a transformative effect on the entire ecosystem, and we see multitude of solutions coming from them to solve problems of smallholder farmers. And I would also like to point out that more we are seeing a lot of intersection of agri-tech and fintech. And one thing which is very clear, to scale this model, it won't be its own, and we need a very sort of a collaborative approach to take this forward. And that's one of the purpose that we have at ThinkAg, is to essentially connect a lot of these agtech startups with a wider ecosystem we can scale these solutions. Start by just putting a broad brush on the current agtech ecosystem. As of now, we have more than 3,000 registered agtech and food startups in India, as per Startup India data. We rank number in terms of number of startups. And the good part is, out of the 3,000 startups, more than 500 startups have crossed a POC, concept stage, and already in a commercialization mode. And this number is growing at about 25 to 30% per year. So that's a phenomenal growth. Personally, I believe Indian agriculture has the potential to absorb more than 10,000 agtech startups. Of course, a bold statement to make, but I'm very confident the kind of opportunity it offers and the kind of talent we are seeing in this space, it's going to go up. As most of you know that India is a $5 trillion economy, and I don't think that's going to happen unless we build our food economy to $1 trillion. Right now, we are about that $100 billion size, as Anil mentioned. So if you have to go from a $400 billion to almost $1 trillion economy, we need investment. Again, it's our estimate in the order of about $100 billion. My hypothesis is that at least 10% of this investment should go to innovations developed by agri-tech startups. It's essentially $10 billion. Right? So which means, let's say, approximately $1 billion of investment every year. Right? If you look at the graph in the middle, the total cumulative investment agri-tech over last 5.5 years is just about $500 million. That's a drop in the ocean in the context of the opportunity that it offers, as well as in the context of the overall venture capital money which comes into India, which is almost $1 a year. So AgTech is not even 1% of total VC money that India receives. But the good news is, if you look at the graph, the last year in particular, 2000. This sector received about $250 million of venture capital money. So that slope looks very exciting. I think more than the slope of the curve, what is more exciting is participation of funds, mainstream funds, developmental financial institutions, foundations. A lot of international investors are looking to invest in Indian agtech. I think that's a very, very good sign. Even in COVID times, when the deal flow is kind of trimmed down, we saw dozen agtech deals closing. That's a good number, and I'm privy to another 3 or 4 deals which may soon close. So that's a very healthy sort of, as far as investment is concerned, and I hope that momentum is going to continue for many more years. Now, this slide talks about the key innovation themes in Indian Agtech. And I want to spend a little bit more time on this slide. This is very important. I think what is the message that I want to give to the audience is that innovation theme you can take in Indian Agri-Tech. There's a huge fintech component, which is either implicit, nascent, or evolving. So I want to talk about that. Startups in each theme. Of course, that's just a small sample. The number is much more. But whenever you have time, please look at their websites and see the phenomenal work that they are doing. So let's start with the first theme around farm management and data analytics, which is essentially sort of has the combination of and software tools to build interesting models around crop management, farm monitoring, yield assessment, quality assessing, and price forecasting. I think these kind of models are very, very important. And there are already many use cases where banks and have integrated these models for their own risk assessment and building their loan recovery forecast and loan recovery models. So we already have some use cases with at least 3 or 4 private sector started to use these models with some of the names which are written on the right. That's one intervention. Second is around agri input marketplaces, which is essentially enabling access of high quality agri inputs at the right time, at the right price, directly to the right. And most of these models have multiple components, including collecting data from the farm around weather, crop health, soil moisture, etc. And do prescriptive selling for farmers. So it's not vanilla selling like we see in the urban markets, very, very prescriptive selling with the objective of giving the right inputs and optimizing the input cost. What we have seen in these models, again, is that most of the inputs that are sold in India, and most of you would know, including machinery, agrochemicals, they are sold on credit. Right? Look at the input, somewhere between 60 to 70 billion dollar per annum. Just imagine the kind of potential it opens up for AgriFinTech if digitized. Right? And this is essentially likes of AgroStar, Big Heart, Dehat, Unnati, Gramophone are trying to do is to build digital applications. And if that happens, the whole agri input financing opportunity opens up for banks and NBFC. Next is agri output marketplaces. Essentially, these are business models which involve from Horeca, from modern trade, from Kirana stores, and also from directly from consumers, and build supply chain all the way to farmers with little intermediation, more transparency, more traceability. Why these are important from a fintech perspective? The biggest challenge in farmer financing is recovery of loans. Most farmers grow 2 to 3 crops a year. So it essentially means if I'm a financier, I have to go to the farmer after end of each crop cycle. And if I have to do it at few thousand farmers, probably I can do it. But I want to scale this model to let's say 100,000 farmers, to half a. How will that happen without a proper recovery models? And that's where I believe agri output marketplaces have a huge role to play, because they are actually closing the loop. So instead of going to the farmer, I'll go to these guys who are aggregating produce from the farmers. I'll have a tripartite agreement between farmers, the financier, and this collecting farmer dues, so that the recovery becomes much more efficient. And that's where I see a huge role for all the aggregators startup that we are seeing. And this is one of the sectors which is sort of attracting a lot of investor interest also. So there's a huge great fintech models into agri output marketplaces. So for agri financing and fintech, which includes value chain financing, Arindam already alluded to some of them. Samunati, who's built a phenomenal story in value chain financing by financing both CBOs and FPOs. Great job in post-harvest financing. And like startups like Bijak have also developed very interesting innovative models in farmer onboarding, in doing very efficient KYC, very interesting scoring models. Albert was alluding to those models, which include parameters around farmer income and more than that, farmer behavior. I think that's a huge opportunity in waiting. In urban fintech, we see at least dozen trying to build credit scoring models on alternative data. I don't think we have really touched the tip of the iceberg when it comes, and I'm sure there'll be at least couple of dozen startups doing that in time to come. Fifth one is livestock management, very important segment, including dairy. Like Stal, AquaConnect, who are trying to digitize the entire supply chain to bring efficiency, reduce cost. And I think most of these data-driven supply chains are now pivoting to build supply chain linkages for feed, poultry feed, aqua feed, cattle feed, and also linkages on the opens up opportunity for many of these supply chains. Mechanization and normal. How important mechanization. China has demonstrated 3 times productivity despite very similar farm profile as India because of high use of mechanization. I think what we essentially need are affordable implements, preferably less than $100 value, which can do a multitasking on small farm of a hectare or couple of hectares, or rental models which can make high cost implements accessible to smallholder farmers, right? And that's open up opportunity financing as well as lease financing. Likewise, the novel farming, I think this will also gain momentum, particularly in the context of developing hyper-local large consumption in Delhi, Mumbai, Bangalore, Chennai. These models can be very effective, and we have seen. And again, they typically have high capex and then continuous OPEX cost, so that also can be an opportunity for new age formats. Yeah, so I think despite the opportunity, why these models have not scaled up. So I think it'll be good to spend some time on looking at the limitation a lot of models are facing. As I said, first and foremost, access to a risk capital, equity capital. It has been one of those areas where you see high degree of policy risk. More in terms of predictability of policy rather than anything else. We are seeing huge amount of climate risk of late, increasing frequency of droughts, flood. We are seeing huge influx of locusts into India, and we are seeing depletion in our honeybee population. Those are multiple data points pointing to climate, which is posing challenges towards sustainability of agriculture, and that's why the gestation periods are long. The typical we see sort of 7 to 8 years of investment period, 25% return expectation. I don't think they're the right models to be copied in agri-tech. We need to build models which are very specific to agri-tech. It takes more time to scale these models, right? Second challenge is on the leverage from banks and financial institutions. That's another challenge. Most of the models on debt side typically have high cost of capital, and most of them need credit guarantee structure. Any startup trying to raise money for financing farmers or banks need to give FLG, which ranges from as low as 10% to as much as 100%. So where these startups are going to get that kind of money? So that's another challenge. The next challenge which we are trying to solve at ThinkAg is essentially the mismatch in terms of expectation between corporate and tech companies. I would say it's not a conventional customer relationship approach. So setting the expectation right from the beginning, hand-holding is so critical to build some sort of scalable models. Challenge these Agtechs face because most banks have their own legacy systems. So it's never easy to get in sort of integrating a model. So it's a process by itself. Albert and Arindam pointed out to it, huge issue. Most of the data startups in agri-tech spend 70 to 80% of their time collecting data. The core is build interesting APIs and sort of analytic models over and above the data layers. But since the data is not available, it, cleaning it. I think that's where we need to be building more efficient models. Very few and most Agtech spending time on a lot of digitization effort themselves. Last but not the least, challenge of most of them don't have smartphones. They do have feature phones. So I think that's another area how to build application for feature phones, right? I think that could be another area of opportunity. And last but not the least, the digital payments. Of course, because of Jan Dhan account scheme, a lot of farmers have banks access to banks. The share of digital payment is still very, very limited. Farmers are still comfortable dealing in cash. That's a game changer if effective digital payment solution can be evolved. I am personally very hopeful that with WhatsApp solutions coming up, it will see pick up because most farmers are very comfortable using WhatsApp. Anil into the discussion. Anil, can you please come in?
Thanks, Hemant. The details about the Agtech landscape. So now we are moving to the section 3, which is very interesting section because we are talking about the intersection of Agtechs and incumbents, which is basically we're talking about financial institutions. Before we go into that section, let me tell you a very quick story. So this story is about a farmer. So for the namesake, farmer is the name of farmer, and he lives in a village in north of MP. He typically grows mustard as a rabi crop or a winter crop because that is prevalent in his area and he's influenced by that. And as a typical small farmer, he has inherited a land parcel of around 4 acres, which is his main asset to feed his family of around 4-5 people. So how is raising his funds? He typically relies on own savings or local money lenders or commission agents for his financing needs. In the past, he tried to access bank finance, and for that purpose, he has made effort. So first he visited the nearest bank branch, which is around 15 to 20 kilometers from his village. And during his first visit, he got to know that banks wants to see his documents, his land record, mutation, his personal ID, and various other documents. Besides, he needs to provide points and information that banks can verify. Unfortunately, he wasn't very familiar with most of those requirements. So what he did, he took help of someone and who knew about it, and he shared those documents and some of the information with the bank. But bank being bank, they saw a lot of discrepancies in those documents, and branch manager wasn't really satisfied, and he asked for more details. Dharampal, on the one hand, he realized that it was very difficult for him to get the loan, and simultaneously he also realized that there is a huge opportunity cost for him, particularly when the sowing season was approaching. So this is the story from the farmer's side. Let's look at it from the other side, that is from the branch side. And this is how branch manager looks at this proposal. He looks at the information and cost of verifying the information. He also looks at Dharampal is eligible for a loan amount of around 40,000 rupees, which is around $500 US. It is based on the scale of finance, and loan calculation is based on the crop and the area that he has. For that purpose, for making that loan, he needs to make at least 3 videos. One for pre-verification, second at the time of sanction of loan, and at least one more to monitor while crop is carrying the field. And if there is some distress, it may warrant more videos. He also estimated that probably it's not worth his time and effort because he already has so many other options available in the local area. Those options include farmers who are closer to his branch, or they are large and medium farmers with high size. So now, with this thing in mind, what we have done is that we have tried to look at the entire value chain for financing from a lender's perspective and how Agtech can help lenders land data technology. In a typical credit cycle, a lender wants to originate the loan, assess the credit worthiness, enter the end use, and finally collect the loan. So basically, it's a 4-step cycle. So for origination of loan, a lender needs a set of data points to further process. This includes personal profile, income and cropping profile, and credit history of the customer. These requirements are quite humongous, and absence of them can make a banker or underwriter. Banks find it challenging to collect entire data set and verify them with credible sources. Farmers like example find them overbearing and almost unnecessary. We see that Agtech offers solutions through physical data collection, through local intermediaries, satellite imageries, weather stations, smart sensors, and so on. Hemendra has already discussed about that, so I'll not go into the details of that. Hemendra, can you move to the next slide, please? For underwriting or credit assessment, banks want to understand the health of underlying asset and how that will be put to use. In our case, this will be land and crop on that. In addition, they also look at if there are any other movable asset or property, so they can further secure their loan. Even in this space, there are Agtechs who have worked with local data collection, which is both cost effective as well as reliable. Some of the interesting examples are around a few Agtechs like Farm Guide, Farm Mart, or Jagisa. Even mentioned about them. So they are basically working with local agencies to collect and verify the data for taking better decisions. They are also trying to develop solutions so as to digitize those records and use them in a digital manner. Can we move to the next slide, please? Once a loan is processed, bank will monitor land use and finally collect as per the tenor of the loan. For loan servicing and monitoring, various technology-based solutions like satellite imagery solutions have been perfected by a few Agtech. You can read more about some of them. These can help the lender to monitor crop position, yield estimation. It can also help in demand forecasting through large-scale imagery assessment. If we are able to handle the first three parts from origination to assessment to monitoring, well, we are all set for loan collection. So as to complete the loop of collection and also market linkage, many of the Agtechs provide solutions on that side also. If we combine all these solutions, we hope that likes of Global would be able to access formal finance and bank would be more comfortable to lend to them. Can we move to the next slide, please? Yeah, but I think there is some problem. So this is very easy to say, and then actually doing it. We see a wide gap between what banks feel and do and what Agtechs can offer. We need to work on them so as to scale these solutions. This will require some more time. We are sure that with collaboration, we can reach there. Let me highlight some of the key reasons that we need to work on while overall ecosystem matures over a period of time. First is around how those Agtech solutions work. Most of the solutions are standalone or are partial solution as of now. Banks are not getting a complete full stack solution that they want to see. This is a journey and hence will take some time to complete the entire life cycle from origination to production. Second challenge is around risk sharing. I think both Arindam and talked about it. Banks want Agtechs to share risk and Agtechs don't have so much capital to do that. On top of that, many of the Agtechs also feel that in any case, the final decision is with the bank. Third and fourth are classic behavioral issues. Actually, these are our innate resistance to change. Many of the banks find it difficult to understand these new age solutions or believe that Agtechs do not offer anything beyond data. Banks, for obvious reason, trust their own staff for data collection, something that is not scalable. They also want to have a long time series data even before they can. Let me take a pause here and again hand over to him so that he can talk about one of the examples how this entire value chain from origination to collection can work and then take you through to the concluding session. Thank you. Over to you, Hemendra.
Thanks, Anil. So yeah, of course, I think we are running behind schedule. Speed on a little bit. So as Anil mentioned that there is lack of full stack solution, right? And I think most of these startups are like in their third or fourth year of journey. So it's also fair to expect from them that they will be able to develop a full stack solution stage of their growth. So I think one suggestion that we have from sort of building more pilots, building more traction into this solution is to bring various Agtechs together. And we have given 2 or 3 examples on the slide. So let's say take the first one, where Gramophone, who's into agri-input sales, build the input model. Jai Kisan, which understands farmer onboarding and credit scoring, comes with it. SatSure comes with a sort of risk management solution or a low recovery solution. And then there is AgriBazaar or a Ninja Card who ultimately collects the sort of recovers the loan on behalf of the. So I think this is the kind of approach. Of course, these names are just for example. The names can change, but I think one thing which we can do is to bring these startups together to work together to build some sort of demonstrable results which can be used for scaling this model further. Brings us to the last section: ways to improve the ecosystem for Agtechs in India. 3 or 4 suggestions, and I think some of them have already been discussed, but probably I'll sort of talk about them briefly. I think the need for AgriTech is gaining more and more importance. What India's tech did to fintech, I think that's the same potential AgriTech have for Agtech, right? And AgriTech, I'm sure, I think at a very, very basic level, is connecting the farmer identity with the farm identity. And farmer identity could be Aadhaar number. Farm identity is something which we have to create. I think most of the revenue department of the state government is either not available or not digitized. So we need to create an ID. And if we link these two IDs, right, it becomes a very powerful ID for startups who can build access to millions of farmers. For the government also, who can do a lot of farmer welfare schemes, routing such as DBT through this platform, and also for the financial institutions, food processing companies, agri-input companies, anyone who is facing the challenge of building a direct farmer connect. I think this could be the solution. Of course, for this, a very important thing, the digitization of data. Startups have done basis the need of their clients, but if it has to be done at scale, I think that's where the role of state government comes in. I think it is not just collection of the data, but regular updating of the data and also authenticating the data. And that's why the government becomes very important, and they have to take a lead role in building this platform of sorts at the state level. Another challenge for startups in particular, and we have seen multiple times, agriculture is a state subject, but we don't have even one state with a dedicated agri-tech policy. Right? I think that's the need of the hour. We need to build more engagement between startups and the government for any of the agri-tech scale further. Then what are the other possible areas? I think Arindam hinted at it in terms of the solution needed on the post-harvest side. The total output value at the farm to $250 billion. But if you look at the post-harvest financing by collateral management companies and some of the banks, it is still less than $10 billion. So there are some serious gaps out there, which means we need to build assets, be it warehousing, be it primary processing, be it pack houses, and build a seamless post-harvest digital financing solution. Arindam mentioned about Aryadhan, and I know a few others who are trying to build solutions around that. So that would be really interesting. FPOs, I think this is where the government is very bullish on, and I think that's improve farm economics by bringing farmers together, and that's where the role of FPOs become very important. But typical challenges which FPOs have, be it digitization, be it lack of talent, be it lack of access of markets, access to inputs, I think this is precisely Agtech startups are trying to solve. But unfortunately, till now, both FPOs and Agtech startup have worked in silos. They're two points. They don't talk to each other. And that's the role we need to be playing as ecosystem players to bring them together. Their relationship become more symbiotic and complementary. Last but not the least, the cost of funds. I think, as I mentioned already, most of the NBFCs, the startups who are financing farmers or value chain, are dependent on banks to lend to them. Their own cost of borrowing is 14 to 16%. They end up lending at 18 to 24%. The most interesting part that I found by my visit to various villages with these startups, borrowing even at 18 to 24%, as long as he gets money on time. That's the need that he have. and the recovery rate has been pretty good. So just imagine if we can bring the cost of funding down to, let's say, 10 to 12%. I for the opportunity for fintech and agri-tech big time. Yeah, so this is the concluding slide. So again, at the cost of repetition, maybe I will try and summarize some of the points which Anil made and I made. I think one message which is loud and clear: we need to build partnerships between financial institutions and Agtech startups. This has what I call a PPP approach, not public-private partnership. This is pilot to partnership. I think that's the mode of engagement that we need to build. Second is platform. Bringing players from the input side, output, data, advisory, financing together, and create some incentive structure for them to come together, right? Guys who are starved for capital, starved of management bandwidth, why would they come together, right? And that's where our role comes into play: how to bring them together, how to build pilot architecture, and how to bring those learnings to scale the solutions. Digitization, access to transaction. I think that's where the role of government, role of telecom players, role of imagery players come into picture. I think that's the need of the hour. I'm very, very hopeful if we start digitizing the supply chain, the opportunity of financing will go multiple times. Last but not the least, I think this is one of my personal frustrations. I've worked with startups in India, few in Africa, few in South Asia, Southeast Asia. Everyone is trying to solve similar problems of smallholder farmers, right? But unfortunately, they don't talk to each other. They are working in their geographies, typically leading to a lot of duplication of efforts. And I don't think that's the right utilization of their time, resources, and energy. And that's where the role of someone like World Bank or a Rabo Bank, who are the global players who are operating in all these geographies. Can we create a agri-fintech innovation corridor connecting these markets, right? And if you add up all these three markets, I'm sure this will probably be 400 million smallholder farmers, if not less, if not more. And so that's a large number of smallholder farmers. So can we bring startups, incubators, investors, financial institutions together to draw learnings from each other so that we don't duplicate efforts and build scalable and portable solutions across geographies for them to sort of go to the next level. So with that message, I'll conclude. And on behalf of Anil and myself, I want to thank all the organizers, World Bank, Rabo Bank, and all the audience who are on the call for patient listening. Thank you very much.
Thank you very much, Hemendra and Anil. This is very rich material, very insightful kind of thing. I have never seen this kind of data at one place. And so I think it will definitely add to our thinking about what could be done. It has got good data, good recommendations, good landscape analysis, and it will help us to really identify what the future investments in this space should be. So I will now pass on to Arindam to ask him what next. What are we do with this report? What's your strategy of Rabo to deal with these findings? What are you going to take away from this, and what are you going to do? Arindam, you have to unmute yourself. You are muted.
Sorry. So, Parmesh, thank you. So following the report, what we have done is we have grounded about 5 initiatives already. This is based on the recommendations of the report and our understanding and our capabilities of delivering specific projects. The first thing we did was early this year, we called a global expert from Netherlands who has huge expertise in credit scoring and credit modeling. And we did a 2-day workshop with about 45 Agtech and AgFinTech companies. The response was overwhelming. So we needed that kind of interest from the players. And once we got the interest, what we are doing on the ground, working with 3 of the retail Agtech companies to build up credit scoring models. That's already work in progress. The third stuff that we are doing is we are using Avanti's platform and then the digital platform of Jai Kisan to do the first formal financing of smallholder farmers using a digital platform. That's already approved. We are waiting for the lockdown to lift, and we will roll out this program. It's the first organized such program in India for financing smallholder farmers using a digital platform. Now, from the Rabo Bank side, the innovation team is already scoping the Indian market to build up a credit assessment tool, which will be used as a proprietary tool offered to the Indian financial institutions to lock mainstream capital for smallholder farmers. We will be leveraging on a global knowledge of food and agribusiness, and specifically, building up on the Indian specific issues to be able to do that. So that work has already started. The second work, which is again work in progress, is to build up a digital platform, something similar to what Heminder has mentioned, is where the supply chain large players, the food and agribusiness players, the traders and the tech companies, they plug in to solve specific problems. So this is a digital enabled meeting place without going through the high touch expensive accelerator model. That's already work in progress. And the third initiative which we are yet to roll out is using AgFinTech to solve the issue of food waste and food loss in the Indian market by identifying specific initiatives which addresses this issue, because from the climate perspective, that's the one big elephant in the room, food loss in India, and the amount of money we lose out because of food loss is something that we feel can also be addressed using the AgFinTech model. Parmesh.
Thank you very much, Arindam. So I think you really have a clear kind of follow-up activities. Can everyone mute their mics, please? Please.
Yeah.
Can the organizers mute everyone before we conclude this webinar, because we will otherwise get a lot of echo? Okay. So I would now move to the discussants, and I would ask you to continue to ask your questions, because we are very rich set of questions coming up. And we are also trying to ensure that if we can't take your questions in this round, we will develop a virtual, response from the panelists, and then send you the responses later on also. So keep on asking your questions. It's very rich questions you're asking. Now I'll move to our discussants. First with Dr. Leakey, who is the Additional Secretary, Ministry of Agriculture, and is originator of a number of innovative transformational ideas, both on the policy front and implementation on that. And so, Dr. Leakey, over to you. You have maybe 7 to 8 minutes to talk.
Thank you, Parmesh. Thank you very much for making me a part of this webinar. It's really been nice to be here. Thank you, Rolf, Albert, Arindam, Heminder, Anil, for your views and pertinent observations in a fantastic presentation based on data and evidence. Especially, Heminder, the slide on agri-tech opportunities. I think I personally would vouch for that slide, because that's the crux that we are presenting. I would just like to make 4 or 5 quick points. Very true, agriculture is a key sector that supports the Indian economy. But I think any amount of credit, even at reasonable rates, cannot guarantee higher productivity or adequate income unless there are other supporting factors which help in, which is availability of agricultural inputs, services, and most important, remunerative markets for the products. So as was rightly pointed out by one of the panelists, agriculture credit policies in India are mainly supply driven. So we look at targeted ground level credit, we look at interest subvention, and directed lending by way of priority sector lending. While the spread of institutional credit has increased, yes, definitely, as pointed out, technology has a big role to play with mobile banking, internet banking, the concept of bank correspondence. The outreach in the rural hinterland has increased, but yet there are still a lot of hiccups. But that said, I think I saw a slide which presented certain constraints, focus areas, key recommendations, and expected outcomes. I think that's another critical slide. Now, the reform process in the last 5 years has been thought of, has been hastened. COVID-19, fortunately, has provided a context and an opportunity. So I'm sure you would have heard the Honorable Finance Minister's speech where she made a couple of announcements for the agriculture sector. One was the coming in of a central law, which we are working on to bring in some competition for the regulated markets which have existed over the decades. That is work in progress. Number two, I think two issues pointed out: the storage and asset infrastructure post-harvest financing. That has been addressed in a big way by the creation of this Agri-Infrastructure Fund for farm gate infrastructure. I think this fund will be constituted in the next couple of days, and it should provide a lot of backup in terms of finance for primary agricultural capital societies, agri-startups, the 450 or so agri-startups that are in the country. A lot of funding will come from this Agri-Infrastructure Fund. Another major issue pointed out in the slide was FPOs. Now, absolutely correct, for economies of scale, in view of our small farmers having small parcels of land, bringing farmers together is the best way out. I think about 4,000 to 5,000 FPOs are already in existence. 10,000 have been announced, but what has been announced has something new to offer, and which is as follows: that now onwards, for the 10,000 FPOs which will be sort of brought in by various implementing agencies, there will be, with a equity grant, a credit guarantee. I think one of the major problems of FPOs, other than capacity building or learning of the Companies Act modalities, is banks not having the confidence to fund FPOs. And I would widen the ambit to include agri-startups, as was pointed out. So a credit guarantee fund will also be set up as a part of the new FPO policy, so that so the loaning from any bank is backed up. I think one key thing which was pointed out in the presentation was this entire gamut of data aggregation. I'm not an expert, but having served for 2 years in agriculture in Haryana, and now for the last 2 years in the Ministry of Agriculture, building an agri-stack with a secure digital platform that integrates data. There are n number of portals in state governments for procurement. There are platforms existing outside the government. It all has to come in one place. I think one great initiative that the government of India is planning, and it is work in progress, active work in progress, and we've had discussions with World Bank also. Right now we have electronic national agriculture market. It's a very interesting concept. It's a virtual market, but its back end is in a physical space, which is the regulated market. Now, there is a talk of a platform of platforms, and this electronic national agriculture market is essentially for price discovery, but we are trying to see how the entire ecosystem of all the agri-startups that you mentioned, they do good work, Godamwala, Mandi.com, AgriBazaar, Interlabs, how they can be brought on board to the ENAM, and how ENAM can add a value to it in terms of both value and volume by bringing all these other platforms together. I think that will be absolutely revolutionary, and I would therefore, I feel really great to be a part of this forum, and that is something we are working on day and night. In terms of market reforms which are currently in place, the market reforms, the direct marketing has been a concept which has been talked of for the last many decades, and last 5 years, a lot of work happened, but COVID provided the right context. So a lot of state governments have amended their APMC, the Agricultural Marketing Committee Acts, to allow farmers to access traders, bulk buyers and processors. But with the central law coming in, I think there will be more, so to say, ease of business that has also been highlighted as an issue. I think with these points, one last issue as an administrator, having served in the state government and seen the field situation and interacted with farmers across the board, I think administratively, a lot of hiccups have to be ironed out. For instance, the role of an agriculture development officer in the field. Banking is one area where the banks have to also reform their processes, cash flows, how information of a farmer is collected by a bank. At the same time, I have seen in Haryana a situation where one agriculture development officer, who's the last mile person, handles 15 villages at one point. It's impossible for any human being to be in 15 places, even if he divides the time by the week. So we need to fill up positions at the last mile. We need to create capacities and have more training modules on digital technologies for these agriculture development officers who are ultimately the last point contact with the farmers. Yes, there are bottlenecks in the whole process. There are hiccups, but I think we are making a lot of progress. In the ministry, at least, we are currently very excited about the central law. We are very excited about the platform of platforms concept of the national electronic market. And our engagement with the agri startups has been heightened. One example is that the electronic national market, or even otherwise, we felt the logistics issue. For instance, if a farmer buys online in Kerala from Punjab, how does he transport? So one bottleneck was the logistics app. So recently we've launched an all India app where we have partnered with 11 to 12 private truckers, private truck aggregators like Truck Suvida, and there are several other names. And as a result of that aggregation on an NIC platform, we have almost 11 lakh trucks for transport available, which is not a very huge number for a country like India. But these initiatives, again, have to be scaled up. So I will end at that. And if there'll be any questions, I'd be very happy to answer. But thank you again for making me a partner in this webinar. Thank you so much, Ramesh.
Thank you very much, Dr. Lekhi, for giving the whole perspective of Government of India's thinking and a lot of innovations and ideas which you are pursuing, and you are seeing the congruence of various things which the speakers raised and what could be done jointly. And I think this idea about the skilling part is very important. So in Kenya, we have launched a digital kind of a certification program for all agriculture staff at county level and LL, and we have Microsoft and a lot of startups and digital companies participating in just reforming the complete digital transformation of the agriculture sector by having a digital assistant available to every person who works at this department or works with agribusiness companies and all that. So I think this architecture, which require, as people said, requires a little bit transformational kind of thinking in terms of changing the skill set of all the people who work in this sector. So it can't be done in a piecemeal kind of a manner. We need a lot of bankers who need to learn how to use these digital assistants and kind of devices which they have by which they can collect the data of the farmer at their fingertip and all that. So we need some more transformation of the systems which go with that. As very, very good points you made on lots of other things. And we are also looking forward to how we work with ENAM. And yesterday we had a presentation by the Argentinians on their whole agro-logistic platforms, and we'll share it with you, where they brought the commodity exchange and the government together to really transform the agro-logistics in the COVID period. And I think there are some lessons which we can get from them. And I also agree with the AgriFinTech corridor part. The point which Heminder said is, I think this is high time we do it, because when I was thinking about it, I thought about 8 countries which had some things which are closely related to what Heminder and Anil were talking about, but we have very less cross-sharing. And I think we will announce a program on that shortly. And I take that part very seriously. Now, let's go to the next discussants. Is Panos online? Panos, would you like to come in now? And then Gayatri?
Yes.
And then we will take questions from the audience, because I have a lot of good questions coming in from the audience. I don't want the audience to feel that we are neglecting them, because we are running short of time. We will go up to 10:30 our time, which means that we will extend the whole session by about 15 minutes to allow that to happen. But I would request the discussants to be brief, but they are free to convey what they want to convey. Over to you, Panas.
Thank you, Parmesh, and thank you very much for the presentation. I represent a team within the financial sector at the World Bank that is dedicated to agriculture finance. And of course, the digital finance is a key subject for our work. My comments, I would like to start by saying that many times we look at the supply constraint for providing finance to agriculture and financing the smallholder farmers. But, you know, as my background as a former banker, there is a problem to find bankable clients. So the farmers complain that there is no access to finance. The banks do not finance them. But from the banking side, the counter argument is that there is not enough bankable clients. Now, there is a big need in agriculture to transform the value chains. The change in diets, the logistics, the urbanizations, that they have some significant implications, which requires investments along the value chain for cold storage, for transportation, for new logistics, for food safety. These are what they will pull a lot of the farmers to become bankable. So it needs we need to think more about financing the full value chain, and there is. And particularly, we are seeing in several countries, and particularly in China, the creation of equity funds that they provide equity and long-term finance to agribusiness SMEs to upgrade and modernize the whole value chain from farm to fork. On the financial technology and agriculture, we are part of we have together with AgGP, we have an AgriFin network that has over 2,000 members, and together with the SME Finance Forum, we ran a survey to these members to tell us about COVID-19. And one good thing that we heard was that the vast majority of the financial institutions across the globe, they expect that agricultural portfolios will perform somewhat better. They will still be hit, but somewhat better than other sectors. So that was a piece of good news. And the other thing, when we ask them what do they do or how do they think that they will respond to COVID-19, the vast majority, they mention about relying more on digital technology. So a number of them, they mention about going towards automation, like automation in approving loans without physical presence, using data and cash flow projections. They do it mostly for existing clients, but they are moving it also for the new clients. Here, and Rolf is also present. Rolf's previous team in Ukraine developed a cash flow based lending model called Clara, which provides estimation of cash flows for banks and enable them to lend based on these cash flow projections. Coupling these type of instruments with access to digital information from digitized payment systems will enhance significantly this tool. The second thing that we heard from the financial institutions is the reliance much more on these e-commerce platforms. And these e-commerce platforms, they tend to integrate not only information related to transactions, to digitize payments and transactions, but also access to markets, access to satellite information, access to other forms of data that they are available. And this enhances the data and information for financial institutions to make the decisions. These e-platforms, e-commerce platforms that integrate a number of solutions like inputs, output, information, can be found in China. There is a long history by now in China, like the rural Taobao, the Pinduoduo, which also they embed access to finance and very quick approval for finance. So this is something that we're going to see much more. There was before on COVID, but I think with COVID-19 we will have acceleration in this trend in automation of approvals and on reliance of these platforms. My final comment is that we may want also to see that serving the smallholder farmers will require a number of institutions. And in India, of course, there is a number of institutions there. Is beyond the commercial banks, is the NBFIs, the local financial institutions, their MFIs. So to go down the pyramid and serve the vast majority of smallholder farmers, you need to have a multiplicity of financial institutions and a toolbox to help come up with solutions to improve access to finance. Thank you very much.
Thank you very much, Panas, to bringing the global perspective on this discussion. And I think clearly there's a lot of cross-learning required from various. We hosted Pinanduo just 2 weeks back on the similar seminar, where they presented how they worked in COVID to really bring a lot of smallholder farmer market products and then link them up with other things. And I think clearly Agtech, China doesn't have that kind of an Agtech sector as we have in India or Africa, but they are using different kinds of more large-scale solutions through the Alibaba and the Pinanduo kind of models, which are the two large e-commerce companies there. And so we need to think of a platform solution which, as Panos says, which combines these aspects. Gayatri, would you like to come in now briefly with your perspective? And then I'll open, I will then read out all the questions we have received till now, and then final round with the panelists at the end.
Yes, thanks very much, Parmesh. I'll be brief. I want to appreciate everybody, first of all. I think the combination of these presentations and the discussions have been very enriching. And I think particularly I am infected by the enthusiasm that has been put forward by pretty much everyone who has spoken so far. In these days in particular, this is an important sentiment to share. And I think what clearly is resulting in that enthusiasm is the combination of the excellent technical abilities within the country and the examples that have been put forward already in the presentation, but combined with the policy changes that are also coming through right now. So there's been a sort of a long build up of the ability of this sector to respond, and perhaps the key to the final door, let's say, could be the types of policy shifts that Dr. Likhi was explaining and that we are hoping to see. Now that said, clearly, as has been mentioned, a very big challenge in India is scalability. It's a challenge because of all the various issues that were laid out in the presentation by Anil and Hemendra, but the fact is that at every state, every state being as large as a country, there is so much variation, so many challenges within those states to address. So I think scalability is certainly something we all need to be working towards a solution on. And here I'd like to sort of suggest that certainly some states have made some progress in terms of digitization, in terms of having databases that may be more accessible. And I wonder whether, as part of the concept that was put forward, an excellent concept on having the AgriFinTech corridor, exchange of ideas, etc., we also try and see whether there's a possibility of bringing to scale within certain parts of India as well the solutions that have been put forward. And I certainly think that from the bank's perspective and the IFC's perspective, we would be glad to partner on those types of scalable pilots, or actually taking the pilots now to scale, because there have been many pilots within the programs that we have also been supporting. And I think that therefore there is a lot of there are a lot of opportunities available, and I think we ought to be actively moving in that direction, as Dr. Leahy also brought up on warehouse financing, etc. These are some areas where I think the models are there, the opportunities are there, and we are really just have to be coming together to take them to scale. Just to mention, just very quickly, as part of the like I said earlier, the excellent idea of having the AgriFinTech aggregation corridor. I like the term, by the way, connecting Africa and South Asia and other regions. In the past, there have been these innovation challenges that the IFC has done for entrepreneurs in South and East Asia to present their various models. And so perhaps we do need to get back to doing some more of those types of challenge funds. And I understand that IFC is partnering with RBI on a regulatory sandbox as well to encourage some more financial solutions. So these types of things would then feed back into the regulations and create a virtuous cycle, which we are certainly happy to be a part of. I just want to end by making the point that while there are a lot of good things happening, lots of technology, lots of ideas, and lots of data sharing arrangements also increasing, it is, I think, important just to underline that that access to data is of course very important, right? And the farmers' own understanding of what rights they have over that data and how they share it is equally important. And here I think the point raised by Dr. Leahy also on how much stress is put on that, both the administrative side of it, the last mile extension workers, etc., but also the farm community as a whole. That sort of pressure has to be managed, because we should not be expecting the world from them without providing the right kind of support to them as well. So the burden of that data, the burden of collecting that data is something that we have to keep in mind, try and manage that very well. And the last point that I will make there is that the models in South Asia of groups and group formations, collective action, I think are now incredibly strong, and taking that and scaling that up, not just with the FPOs, but also with the self-help groups, other types of collective, collective lending models that are in India and South Asia more generally. This is a very unique ecosystem that has been created in this context. So certainly looking to see how to leverage group capacity and group capability and collateral, etc., it should very much be part of this discussion going forward. Thank you very much. I really enjoyed the webinar tonight. Thanks.
Thanks a lot, Gayatri, for bringing out the interesting factors on what we could go looking forward. And clearly the FinTech International Corridor idea is something which we will invest in globally, because I think from all accounts, we just finished a study in Africa on the scalable Agtechs, basically, and we find there are 180 which can really go internationally to scale. And I get requests from a lot of people from Africa is, when do we get to work with South Asians and all that? And same way we get from South Asia. I get a lot of FinTech, the names you mentioned, Hemendra, they approach me on how we work in Africa. And so there's a lot of crossing going on, but not in a structured kind of way. And we need, as a public investment, invest in this corridor, initially as a knowledge learning corridor, but as an investment corridor as we go forward. Now, I'm going to really get the audience in. And these questions are sometimes to specific people, but sometimes they are general questions. So please, I would request the panelists and the discussants to listen carefully what questions I'm reading out, because there's no way to send you a chit or something, because you can't look at your chat. If you have been reading the chat, you know the questions. I hope you have been seeing the chat and following it so that you know which question is coming to you. But I'll take the most important ones first, basically. So there are questions like about the characteristic of the egg lending. says, unlike mortgage and other types of investment loans like vehicles, which have been tied with specific, activities, we don't have similar kind of thing in agriculture. That something is with the cultivation, harvesting. How can we unpack that and develop, landowners, a different thing for landowners, different thing for tenants, farmer cultivators. If we have the data, we can really come out with much more specific lending terms and lending conditions, which I think Arindam referred to as the quality of credit is very poor, because we have a lot of vanilla products which can be given to everyone, irrespective of the commodity, irrespective of the crop, irrespective of everything. So that is not really how agriculture is done. Agriculture is diverse. There are a lot of things which people are there. And the second set of questions, that non-farm economy is as important as farm economy. And why are we looking at only the agriculture? Why aren't we looking at a lot of non-farm enterprises which people are involved in, so that you are offering an aggregate offering to a household or an entrepreneur who is doing 2 or 3 things as opposed to one thing. So that's one question on how do we incorporate that thinking into the Agtech dimension itself, rather than being very compartmentalized on just looking at one small part of it. It's not easy, but this is a question which I think any of you can take. And then I think there's a question that, is there a dichotomy between scale of finance, which guides the borrowing decision, versus actual crops grown by farmers? And hence, from a data-driven decision, how do you marry the two which are diametrically opposite? So it's again the same thing, but how do you take the diversity in? And so the second set of questions are related with digitization. And they are talking about the reliability of the data. Are we collecting data, and how are we ensuring that the data is of good quality, so that the credit which gets developed and the products which get developed are also of good quality? So people are just asking questions about the characteristics of the finance, and how does the data solve that problem? So it's the question is that, is data going to solve all the problems, or are there some things which we have to do in analog manner also? And so that we should know the limitations of what data and digital approaches can do and what they cannot do. The second set of questions are very specific to people, and they are some of questions are that it's to Dr. Leakey, that looking at the scale of limited access to finance by smallholders, what is government's intervention to increase the proportion of credit to smallholders? What is their strategy, the government strategy to deal with that? And the second set of questions are that is it enough to just have agri-tech companies going to them, or we need a lot of communication about the products? And what is the communication part in this? Will we wait for every agtech company to go to millions of farmers, or will we do something more strategic in terms of doing communication to these companies? Second set of questions is that, why have agtech companies appointed only field agents, have not worked with FPOs? And this is true that in Kenya, we have linked 100 FPOs, the top FPOs, with all the startups. And they are now working directly with them. We've created a platform there so that they are able to cover almost like 500,000 farmers in one go, something which they were taking a lot of time to do. So I think, how do we digitize the FPO data and then link it up with the data there, rather than agtech companies acquiring a lot of smallholders, and which is a kind of a cumbersome process. So it's like, how do you mobilize and how do you onboard clients for agtech companies? Are there other strategies which we need to use, which I think Gayatri also alluded, that there are a lot of group-based approaches. So FPOs right now are working as franchisees for agtech companies in Kenya. Why are we not using that approach? And why are all agtech companies spending tons of time on recruiting and onboarding? Why don't they go in a wholesale way with FPOs and do that? These are the questions which they are asking. So, which is FPOs are very unique to India, but the questionnaires are saying that we are not taking full advantage of that in marrying the agtech and FPOs. They are very fragmented silo, which I think Hemendra or someone referred to that as well, that they are currently very siloed at this stage. The other question is to Dr. Leakey is that, what would be the state's role in promotion of agtech? Basically, will you have a dedicated agtech policy so that there's enabling provisions for Agtech companies to work with government as well as to work with banks and other people. There are other questions about regulation. Does RBI have a policy on this, on the role Agtech financing will play, and the financing agencies, which will be standalone financing companies, which will emerge out of this, what role they will play? Or we are looking at Agtech producing a lot of products for the banks, which they can use for credit scoring and others and things. So what is the RBI policy on that? The questions are about that. And then there are a lot of people. Bank of Baroda, I have seen Bhutan is really asking people, I am there, contact me. So I think we have at least 25, 26 people talking. That tech companies are there, the bankers are there. They are saying, oh guys, we want to work with you, come on. So it means there is a need for a platform beyond just this webinar, which really dynamizes this and, do that. So I think Rabo and us as a kind of financiers of this need to think about that. So we are financing a lot of this activity, and we have worked with AgFinTech companies at different points of time in various projects, but I don't think we have an institutional kind of response to that. And the question is that how will this agri-stack really work? How do we invest this systematically as a transformational project as the India stack was there? That's also a question. That's both to Dr. Leakey and the presenters and the Rabo on how do we now go ahead and invest in this solution there. So I'll stop there. And I think this is now your chance to have your last word. We don't have tons of time, clearly. So a brief response, you don't have to ask all the questions. We will get you all these questions virtually, and you can give us a virtual response, which we will share with everyone. So let me start with Hemendra first. Go ahead, Hemendra.
Yeah, Parmesh. So I picked up 3-4 questions. Probably I'll respond to them quickly. So the first one on usage of finance, right? I think if you look at most AgFinTech solution, it is never cash given in the hands of farmer. It is usually the credit limit which goes to him, against which he buys inputs of certain quality from a designated shop. So I think it's very clear that it has to be input linked credit or harvest linked credit or tractor linked credit, right? And I think that's where we need to learn as far as if you have to redesign a priority sector lending, which doesn't differentiate between crop loan and personal loan. I'm not saying we should reduce the allocation, but if we do the crop loan classification with the end usage in mind, we'll do the digitization and we'll solve a lot of problems which farmers are facing. So I think that's the first question. Second, on scale of finance, I think that's a very good question. And that's where I have a suggestion to make. In India, we haven't figured out a seamless transition of a pre-harvest or a crop loan into post-harvest loan. Why is that? The maximum risk for any financer is pre-harvest at the production stage, be it climate risk or pest. But when the crop gets harvested, third question on digitization. Yes, I'm totally with the person who asked this question. Data won't solve everything for sure, but I can see data will probably solve 70% of the problems which Indian agriculture is facing. We still need offline components, be it partnership with FPOs, be it partnership with village level entrepreneurs, NGOs. So I think that stands. I think that will continue to be there, but with accurate, timely, actionable data, 70% problems can be solved. Last on AgriTech, I think it's a fantastic concept. I think what we need to do is to build pilots, right? And to me, unless we start digitizing the land records, a lot of people confuse AgriTech with digitization of land. Not true. So of course, digitization is required to create identity of farmland. And I think what Gayatri was mentioning, yes, we need, and Mr. Leakey was also mentioning, we need probably a lot of people on the ground to collect data. But what I can tell both of them, there's enough tech available now to reduce the cost of data collection. Like satellite imagery can accurately detect farm boundaries today, right? So yes, we need some local ground truthing mechanism to collect data, but technology can reduce the cost of data collection. So I think the whole challenge is to build the farm ID and the farmer ID, and farmer ID would be Aadhaar number, and we link them. The challenge here is that it's a dynamic stake because the farm boundaries change, the crop patterns change. But I think if we build a good architecture, and I'm not saying we should go and build a all India agri-stack, maybe do it for, let's say, 10 villages, one region, one state, and then scale it up. And there'll be a lot of learning in that. All I'm trying to say, there's enough tech, and there are a lot of startups on the call which probably will concur with me that it is a scalable proposition. And if government of India is making lot of effort in this direction, my sincere request to them, please involve these startups. They will come up with solution which will save cost and which will make this stack really actionable. So probably I'll stop here. Thank you.
Thank you, Hemendra. And now I will now go to Dr. Leakey, then after that Arindam, and then Anil. So you please be ready with your questions you want to respond to. And so I think Dr. Leakey can, yeah.
Ramesh, I'm sorry, but
Leakey
Dr. had to leave.
Okay. Then I'll go to Arindam now.
Thanks, Ramesh. So a couple of things, three things came out very strongly. One is about the platform or the corridor as we are referring to. It will take its own time. So you need large players to work on the platform. We are in fact, with Hemendra's help, trying to do a India, Africa and Southeast Asia corridor event by the end of this year. But that will take its own time. The second is about policy, Agtech policy at the state level. I would say that will also take its own time, let it happen when it does. The low-hanging fruit right now is the virtual integration of farmers that the tech companies are doing and the physical aggregation that the FPO, FPCs are doing. That's the low-hanging fruit. So two things are happening. With both this collectivization virtually and physically, we are seeing the formalization of agriculture at the upstream part. Now, both are complementary. And we did a session last year, Pramesh, like you said, you did in Kenya. We got about 40 tech companies into a room, and we got about 15 of the largest NGOs who have about 20 billion farmers with them into a room. And we had a full day discussion on what are the FPO's issues, the three critical issues, and how can the tech companies solve them. And there was a lot of business which was generated from the meeting. And secondly, we are also sponsoring a project of crop-in with one of the largest cooperatives in India in the cashew and mango sector. That we are sponsoring the upfront cost, but the maintenance cost will be taken up by the cooperatives if crop-in shows that kind of results. So that's the sweet spot now, and that's the ground level that needs to be done. And to answer one other question, at this point of time, as Hemendra said, we need high tech and high touch. Just high tech itself is not the right solution right now, because you look at all the leading tech companies in India, whether it's Achio, whether it's Cropin, whether it's AgroStar, whether it's Dehat, they have feet on the street. So at this point of time, you need both till you get the kind of data, till you evolve system at a level where you can go tech. We still haven't reached that point of inflection. Thank you.
And so we would like to work you on that corridor idea, because we are financing a lot of these things in Africa. So we would like all the platforms and networks there to come into the discussion. So I think we should work on this in a more, in a co-production kind of way. We would touch base with you on that, definitely. Anil, would you like to come in now?
Yeah, thank you. So maybe I'll just briefly touch on a couple of the things which have been raised, or a couple of questions which have been raised. First is that I think a very interesting suggestion which has come from that how we combine on-farm, off-farm, or non-farm kind of thing. I think let's understand the history of banking. So what has really happened in the past, that banks were created for a purpose. For example, commercial banks were created for working capital.
So sorry, we can't hear Anil. Yeah, go ahead, Anil.
Yeah, thanks. So basically, there has been a history of banking in India, in the sense like institutions were created for doing something, and they were doing that thing only. So, for example, commercial banks were created for providing working capital loan. There were development financial institutions. There were term lending institutions, old IFCI and ICICI kind of organizations. Similarly, if you look at the rural landscape, there were a different type of banking system was there. Like cooperative banks were there, and probably almost all of us must have forgotten there are banks which are known as land development banks. So they were meant for capital formation. So what has happened, and there are regulatory guidelines all around that. What has really happened is that from the policy side or from the supply side, things are created in silos. In the sense, like there is a separate target for agri loan, there is a separate target for small sector loan, there is a separate target for women, there is a separate target to vulnerable section. So over a period of time, what has happened that banks have also continued with this legacy. And I think the time has really come that wherein a bank has to, or a financial institution has to think that farming is a unit, or say a family is a unit, and what all needs are really there. So I think a lot of banks, based on my conversation with them and based on my understanding, they are working on it. And this is the place where they can use data very, very effectively. Unfortunately, most of the banks are not able to use it. That is my number one. Similarly, for scale of finance, this is becoming a problem now, and there was a problem earlier. In the sense, like in the olden days, banks used to assess. So there was a lot of problem in the market in the sense, like bank A is funding say 10,000 rupees hectare, bank B is funding 20,000 rupees hectare. It was very difficult for all the banks to come at a consensus and say come out with something which was possible or scale area. So there was a system. Okay, let's have a scale of finance, and within scale of finance there was a discretion allowed to the bank. Banks being bankers being bankers, they have always avoided taking many risks, and hence they avoided going beyond scale of finance in most of the cases. So again, for most of the things you'll find there is a history, and probably the time has come to dismantle some of those or to rethink about that. So these are like a couple of suggestions on that side. Third is that, see, Arindam also alluded to it on the data side. Actually, we always say whenever we are dealing with this segment, particularly in an overall system, what we call the low and middle income segment, farmers basically fall in the same segment. Approach cannot be physical or approach cannot be digital. It has to be a combination. What we always say, the approach should be physical. So we can, one can read about our report on fintech that we published a couple of years back. We have been talking about the way to reach out to the masses. As of now, as it stands, it will be physical. It's a combination. We have to, like anyone who wants to work in space, they have to agree to this. I will not spend time on stack because it will take a lot of time.
Yeah, I think we will have to close now because I think we are misusing the intelligence of the participants before they start walking with their feet. We need to just close it at the right time. So I would really use my prerogative of a chair to close the discussion now and make some final remarks in terms of how do we go with that. So first is that I would like to thank all the people who presented, everyone who presented, and all the participants to attend that. And I would also like to thank Amit for really shepherding this very well. I think he was behind the scenes. He's not spoken. I would have given a chance to him to speak, but unfortunately we have run out of time. And then we wait from our side to really convey the difficult logistics of doing it. So 2-3 takeaways clearly are there. So as I think all of you have been saying, I think we are at the early stage of this, but we need to invest in platforms now, which are player platforms, to allow a lot of these people in the stack to come together. So I think we have tried this in other countries, is to create platforms which will bring the different stack players first in terms of knowledge, learning, and then also come up with much more close coordination in terms of product offerings, so that what smallholder does not get things in a diffused way, but gets in a bundled way. And then the data which we get is also of very good quality. The second is the stack solution. I think it's a desirable thing. I like what Heminder is saying. Let's pick 2-3 states where we could pilot this now. And I think we have a lot of states where we are working from the bank side in terms of major agriculture kind of investments which we are doing. We have the similar one on rural livelihood also, which I think we are almost like billions of dollars of investment. And I think it will be easy now to carve out a niche out of that, which could be the data stack. So we need a second conversation between the states and the tech players and people like you, so that we can start designing what that structure would look like. I think we need to now, in the post-COVID environment, I think the appetite for this is very high. And I don't know how long this appetite will last. So we have to use these next 3-4 months to really invest in that. And I also like what Arindam is saying about doing a lot of actual investments on the ground. So I think we need to look at also how we can create an Agtech kind of a facility, for India. And it's like there are a lot of small funds available, but they are very scattered and diffused right now. So I think how do we give it some kind of a large proof of concept shape from what has been done till now, and that's very important. And then the final idea, which I think you guys are already working on, is this Agri-FinTech International Corridor. So everyone I meet in Kenya wants to work in India. They are already working in Rwanda and Uganda and 5 other countries in Africa. The characteristic of this is that everyone is working across the geographies because they think their solutions are more generic. They will need context development, but they will be required to do that. So I think we need to create a bigger community of Agtech, which should be larger than that. And the final thing is also about how do we now work with also the agribusiness SMEs and e-commerce companies to become part of this platform. Because if we don't have that, so like in Kenya, we have Microsoft, Google, all the large agribusiness companies who want to be part of this platform and work with Agtech directly, because I think you need a kind of a collaboration partnership, as Hemendra was saying there. So I think look forward to this space. I think this is not the first, we'll do more, but I think we will discuss how we can work in a more collaborative fashion across the agencies there. And I would like to thank all the discussants, Abhilash and Lekhi, Dr. Lekhi, Panos and Gayatri as well for a rich discussion. Thank you all the participants, and you will get a recording. Yeah, go ahead, Amit. You want to announce something?
One quick announcement. We've been receiving a lot of requests from participants if they can asking if they can showcase their entity and their innovation. So we flashed an email ID. Please feel free to send more details on the email ID. And when we come up with the next version of the webinar, we'll surely look into that, and hopefully one of you will be participating therein. Thanks.
Thank you, Amit. And thanks everyone for patiently being there for 2 hours. It's been a very rich thing. I have learned a lot today. And this is not the first one. You will have many of these, but I think we are committed to really growing this sector globally. Thank you very much. Bye-bye.
Thank you, Parmesh. Take care. Thank you, Amit.
Thank you, everyone.